Let's get some insights on what's happening in the market. Amrita Sen is here. She's head of research at Energy Aspects, joining us live from London. And Amrita, we have to begin on the significant decline that we saw in oil prices overnight. What is driving this, in your view? What actually happens out there? Because the fundamentals haven't necessarily changed. Morning to you.
Morning. No, they haven't. In fact, we've seen some of these crazy moves over the last couple of weeks, and some of these moves are coming on the back of absolutely no news. Yesterday, you couldn't find a single specific news other than the fact that after the 4th of July, we had our US colleagues come back. Recessionary fears are still very much dominating the narrative, but we do know there was some producer selling. And we have seen that in the last couple of weeks as well, Asian producers, and now the big one in Latin America. I mean, some of these producers do tend to come and hedge around these kind of July, August months. I think the real challenge is liquidity always is thin anyways during the summer. Right now, with all these margin calls, the kind of intraday volatility that we've seen, it's even lower. And that then triggered some key technical levels. So CTAs, who are essentially very high frequency traders, you can see that they started selling very, very heavily. So that combination of producer selling plus CTA selling just took us down here. The most important point, like you said, the fundamentals haven't changed, and we can prove that time spread, so the backwardation, hardly budged. Just looking at correlations in the past, if you have backwardation so steep, oil prices should be, $140, $150 per barrel, not at $100 per barrel. So there's a huge disconnect right now between fundamentals and where kind of the paper market is.
Okay, fascinating, Amrita, because as you say, worries about a lack of spare capacity, low inventories probably mean the downside for crude is limited. Backwardation likely here to stay, so the bulls might have it at this point. But has this price move, this significant decline we've seen in the last few hours, ultimately changed where you see oil moving in the second half of the year?
Look, I think in the short term, it's like catching a falling knife. I wouldn't get in the way of this. You can see prices come off because, again, broader equity markets and broader commodity markets are under pressure, right, from these recessionary fears. And it's almost that the market needs to be convinced otherwise first before we stabilize. Does this change our overall structural view of oil? Absolutely not. If anything, the correction in prices should hopefully allay fears of the market about demand destruction. If we should be seeing stronger demand numbers from the pullback we've seen in both crude and products, and that should really set up for a much stronger 2023, if not even Q4 2022. So the longer we stay around here, I think the higher we are going to end up going in a few months' time.
Okay, we'll watch that closely. Amrita, also want your take on this conversation around spare production capacity and lack thereof. What are your sources saying about where OPEC Plus stands and where it can move from this point on? Obviously, this has a heightened focus in the market after we saw that hot mic moment between Emmanuel Macron and Joe Biden, and also critically important ahead of Biden's visit to the region as soon as next week. Mm-hmm.
I think that's obviously going to be a big talking point, right? How much can OPEC even bring back to the market? We don't necessarily think Macron's numbers were correct in 150,000 barrels per day of spare capacity for Saudi Arabia, and that UAE has exhausted spare capacity, because that's still under the current deal, which runs till the end of the year. But overall, spare capacity is very, very limited. I mean, this year, we think it's less than 1 million barrels per day, because ultimately, we are defining spare capacity at what can be brought on in 30 days and sustained for 90 days. Yes, next year, we think more can come online. Saudi Arabia in particular is actually really upping its upstream spending, pushing through a lot more rigs. But again, in the grand scheme of things, 1 million barrels per day, say for this year, that's Libya. And Libya just remains extremely volatile. I'm sure you've seen news overnight. CPC, which is Kazakhstan's exports, once again are going to be shut entirely because a Russian court has ruled after the oil spill that somehow they were in violation, and now they will have to shut exports completely. That's going to be over 1 million barrels per day of Kazakh crude that's going to be taken offline. Again, completely doesn't make sense with the price move we've seen. But again, these fundamental issues are just there in the market, and there's not enough spare capacity to absorb these kind of shocks.